Tell us a bit about what is the essence of this Canadian model of pension funds, and why is this being looked at around the world as maybe the future of long-term investing?
In 2000, teachers really did change the business model for pension plans. Pension plans typically were a 60% equity mix, 40% bonds type of thing. And the concept was really simple. It started out with saying, if we are going to deliver the retirement income for 300,000 teachers in the province of Ontario, we have to have upper quartile returns. We have to have exceptionally good returns. And so what happened back in 2000, 2001 is we basically said, we're going to start investing directly. We're going to start investing in companies directly. Shortly thereafter, we started investing in infrastructure assets. We started investing very, very heavily in real estate, which our subsidiary Cadillac Fairview is how we execute that today. And so back then, today it doesn't seem so unique. Back then, that was a very, very substantial change. So it's a much more proactive, direct investing model that was created, which is now pretty much being followed by, say, the top 10 Canadian pension plans in Canada.
So, I mean, part of that is, as you say, is the investing directly in companies. So maybe you could just give us a few examples of who you've invested in.
For example, there's lots and lots of them, but Cadillac Fairview, of course, everybody probably is aware of Cadillac Fairview, the Eaton Centre and major malls across Canada. But we also are very large investors in Brazil, and Colombia, and Peru, and Chile. 50% of the water supply that is supplied throughout Chile is delivered by a company that we own. The train that runs from St. Pancras Station in London through to the Channel, ourselves and OMERS, another Canadian pension plan, own that concession. The Copenhagen Airport, the Brussels Airport, Bristol, Birmingham, it just goes on. It's a set of assets that are very global, and they're sizable and important assets.
So, I mean, the track record has been very good so far, but what do you see as you've taken on this job over the past year, what have been the biggest challenges in terms of moving from the traditional pension fund role of essentially being a national player to being, a competitor in a quite fierce global investment market?
There's been a lot of change in the last, I'd say, 7-8 years in this industry. The top 10 pension plans in Canada are responsible for almost $1 trillion of investment money. And if you think about it, all of us were pretty much located here in Toronto or Montreal or Edmonton or Vancouver. When you start to go global, there's a whole other layer of complexity that gets brought into the equation. For example, many of the Canadian pension plans, almost top 10, now have offices in London, Hong Kong, Sao Paulo, New York. So going global means putting in a whole new corporate structure, a whole new governance structure. And when you're investing in our case, 53 countries around the world, it's very important also to have a board of directors that starts to understand what it's like to invest in countries that don't necessarily have the same legal systems or the same transparency kind of requirements and governance requirements that we have. So going global really is about changing the whole dynamic of how you invest and manage globally.
And just give us a sense of how much of your portfolio is now invested outside of Canada.
We probably would have about 70% of it outside of Canada, about 70% of it when it comes to the direct private investments that we have.
And I mean, I guess what does that say about your faith in the Canadian economy? I mean, is the fact that so much is going overseas, does that say that Canada isn't the right place to invest?
No, not at all. In fact, in Canada, I would say that the major pension plans in Canada clearly are probably the largest holders of Canadian debt. So if there ever was a statement of faith in Canada, I think that's basically it. And we all invest in Canada as well. But when it's 3% of the world's GDP, and you've got, in our case, approximately $150 billion to invest, you're looking for return profiles that you can access completely globally. So while we invest locally, we have to make sure that we are accessing opportunities around the world as well.
And as you look at the Canadian economy, obviously we're in an interesting moment with the currency falling, the oil price falling. How is that going to change your investment strategy in Canada at all?
No, it won't. It won't, because one of the things that the top 10 pension plans have to do is, and in our case, for the teachers of Ontario, we have to invest for generations of teachers. Our time horizon, when we look at what we have to accomplish, we talk in terms of 50, 60-year time horizons. And so a lot of the investing that we do, while opportunistic from the bottom up, we've got to be looking at opportunity sets 10, 20, 30 years out. When we buy infrastructure assets, we often own infrastructure assets where the concessions on those assets will run all the way to 2045 or 2050. So it's a very, very long time horizon. Fluctuations in currencies, they happen all the time. And economies will rise and fall over the short term. In fact, oftentimes when economies get stressed is exactly the time that we get busy. If we believe that in the long haul the demographics are right, the opportunities are right, and the government structures are right, and policies are right, when things are in crisis, that's usually when we start looking very opportunistically at starting to invest.
And as you look at the oil price globally, I mean, that was obviously a discussion in the previous panel, but do you feel what we're seeing is just a bit of volatility and then it may well come back up to where it's been the last few years?
I think on the oil front, there's more of a structural shift obviously going on. What's happening in North America and particularly in the US, energy self-sufficiency, there's a structural shift that's taking place in here.
As we look around the world, I mean, where do you see the biggest opportunities for Canadian investors?
Probably depends. Certainly in Europe, given the level of government debt amongst all the various countries and the issues that are being faced there, we're finding that the infrastructure investing opportunities are quite interesting to us, because governments are looking for ways to reduce their debt to GDP and their deficit to GDP ratios. And so they have worked very hard to align from the federal, there was a question earlier here, between the federal and the state and the municipal levels. A lot of those governments have really worked hard to get that alignment right. And so we're finding Europe quite rich in opportunities for private companies and infrastructure. In Asia, Asia's a different story again. While there's lots of growth opportunities, it really is around pre-IPO private companies that ultimately are growing very rapidly, and we can participate in those that ultimately lead to IPOs like recent Alibaba and stuff. In South America, we find that Brazil and of course Chile are presenting very interesting opportunities, because those countries coming out clearly need infrastructure, but more greenfield, stuff that has yet to be built as opposed to brownfield. So depending on the region that you're looking at around the world, we'll have a different emphasis in terms of what we're looking at and what the opportunity set is.
And one of the issues that I'd like to explore more, and we'll be talking about it in a panel this afternoon, is how do you build an entrepreneurial, more an entrepreneurial culture in Canada, and why is the venture capital industry so underdeveloped here? Should that be an issue high on the agenda of the pension funds as you take a long-term perspective on Canada?
Venture capital is a particularly difficult one. I believe that we should play some role. At the end of the day, though, as a fiduciary, we really have to focus on earning the returns on behalf of the teachers. But venture capital is difficult. First of all, when you're dealing with anywhere from 150 to 200 billion dollars that you have to invest, venture capital usually comes in the form of $10 or $15 million chunks at a time, maybe $30, $40, $50 million chunks at a time, when in fact the typical deployment that we look at is anywhere from 200 million to even $1 billion, $1.5 billion at a time. And so building scale with venture capital out of the large pension plans is not particularly easy. However, I do think Canada has some issues around venture capital, and clearly the entrepreneurial spirit that exists and the availability of venture capital in the US is quite different than it is here in Canada. There are pension plans that are investing in Kitchener-Waterloo and a lot of the technology stuff that is happening there, and I think that's a really good thing. Having said that, once again, it's very difficult to get scale in the VC area.
We've got time for a couple of quick questions. Anyone want to jump in? Gentleman at the back there. I'm not sure you have a mic. You may just shout.
Maybe I have your mic.
Oh, it's just coming to you now. If you'd say who you are, that'd be great.
Hi. Ron, two quick questions. First of all...
Could you just say who you are first?
I'm Kash Malik from JP Morgan Bank. Ron, quick question. First of all, one of the competitive advantages for Canadian pensions like teachers has been truly global, finding opportunities in different markets. You just announced yesterday beefing up your presence in Europe. As you look through these opportunities, how do you ensure that those opportunities fit the teachers' model, as you look through it, from a broader organization perspective, given those come from various regions? So that's one question. The second question is about, given the state of your pension is a little bit more mature, how important is becoming managing of these investments going forward as opposed to finding new investment opportunities?
Thank you. Both of those questions have one important answer and focus, and that is our liabilities. While we're a pension plan that manages assets, we also have to pay the pensions. We're responsible for cutting the checks. We probably have one of the larger payrolls in the country because retirement checks are something that we have to cut every couple of weeks. And so when we look at delivering the return profile to satisfy those liabilities, that guides our style and type of investing. So for example, we invest in real estate in Cadillac Fairview, but very, very particular real estate. We don't invest in, for example, box malls or large superstores. We invest in Class A urban retail malls and Class A office space because they have very particular assets, almost like a bond, that satisfy our liabilities. When we're investing around the world, our liabilities are tied to inflation because pensions are linked to inflation. And so when we invest in infrastructure, for example, we have to know that part of the infrastructure investment thesis is that we will be paid in accordance with changing levels of inflation. As inflation goes up, our results will actually improve. So we always start with the liabilities because we have to pay pensions for generations to come, and that's what really guides us. It's not so much we think stocks are cheap today and bonds are expensive tomorrow and we're going to move them back and forth. We don't move around like that. We take a long-term view and we try and satisfy our liabilities with the kind of investments we make. And that's really answering both those questions. It's about the liabilities.
Unfortunately, our time is pretty much up, but I just wanted to ask you in one sentence, what's the thing that makes you most optimistic about Canada, the Canadian economy?
The fact that our deficits are, by 2020, heading towards a level that we're going to be about 25% debt to GDP. I think that's a great spot for Canada to be in. I would like to see our infrastructure story change dramatically over the next decade or so. And I think we're getting there. We are having dialogue with the different levels of government about how these 10 pension plans can in fact participate in delivering large infrastructure projects across the country. I think that is a very interesting opportunity set for Canada.
Ron, thank you very much for joining us this morning.